What's going on? Welcome to another new video. So today we are going to be talking about forms of trading orders, and we're also going to discuss more about stop loss and take profit. So this is very important module as we are going towards the end of the basics. The next topic is just going to be lot sizes and leverage. What we are going to cover on this particular topic is that we will actually explore the essential of Forex orders, different types of Forex trading orders like buy stops, sell stops, buy limit and sell limit, and we'll learn how you can actually use them to optimize your trading strategy. We're also going to make sure that you understand how to use stop loss and the importance of using stop loss and take profit in your trading. Without wasting any time, let's actually get directly into the video. So understanding market orders is very important to you as a Forex trader. So market orders are actually executed instantly. You either buy at the available price or you sell at the available price. You don't necessarily need maybe for a market to get to a specific level before you enter. You are just entering directly at the available price. This one is also good because you actually enter especially when we speed in crucial and volatile market. It is more better than other orders which you are going to be seeing in case if you are entering in such market based on the strategy you are using. When I say it's more preferable, you don't think it's the best. That's really that suiting other orders we are going to be seeing. When we talked of market order, it is simply instant market execution where you get filled directly into the market. So it guarantees immediate entry. So the price might slightly vary, but you're actually entering directly into the market in the immediate price available. Then we have the best price available also, which your order is going to be filled quickly as possible. So it is very important for you to know these different forms of orders which we are going to be talking about here. There are other forms of orders which are also known as pending orders. We refer to those forms of orders as pending orders, which means you actually give a command to the market that whenever the market reaches here, perform me these commands. We have four crucial ones which we are going to be focusing on, which I believe with any strategy you are going to learn, it can actually work very well. It is actually buy stop, sell stop, buy limit and sell limit. So I'm going to explain each and every one of them in details and give you some of the advantages and type of strategies which any of them is being used for. For example, we're going to start with the buy stop order. So what is a buy stop order? A buy stop order is actually placed above a current market price. So you are anticipating that what if the price push up and reach at that particular level, it should trigger you into the trade before it actually moves. It is like you giving a command to the market that if you are going to leave at this particular level and push to a specific level, then when you reach here, continue with me and keep going to that my direction. Maybe you anticipate that the price of euro is going to rise against dollar. You said, okay, when you reach at one point this, continue buying until you go and reach at this particular level. Traders use this to actually capitalize in upward momentum. You can use it in breakout strategies that for those who trade breakout strategy, you can be able to use the buy stop order so that you can actually enter on it because you are anticipating that the market is actually going to break above a resistance level or above a supply level, and for you to enter and continue with the momentum. Then you can also use it for momentum trading. For those who actually practice a system which is momentum trading, people like us which we usually enter some trades with momentum, you can use buy stops to also enter so that we enter with momentum in the market. So it is actually when you have confirmed that price is going to go to this particular direction based on the strategy you use, so you just want to place the order so that if it goes and reaches there, it should trigger you and go with momentum in your favor. So buy stop is one of my favorite and is an order which you also need to do. And the importance of you learning pending orders or these market orders is because not all the time you are physically going to be on your chart. There are some time where you actually be busy, so you need to give that command to the market that when you reach here, perform this task for me instead of me sitting and monitoring at my candles. Let's say I pick my phone and I'm looking at my candles, till you go and reach at that particular level before I make an investment decision. No, with these orders it is very easy, as you, even if you are doing another work, you can just give the command that when you reach here, execute this for me, and you can as well delete it without any loss or profit if the market doesn't go to that place anyway. So it is very advantageous. Then we also have sell stop order, which is one of my favorite also. So sell stop order actually is an order that is placed below the market price in anticipation that what if the market goes down and hit that level, it should continue going down. Let's say you have identified a level of support and you assume that the market is going to break that particular level, and when it breaks that particular level, it's going to go down. Then you just have to place the order below that level, knowing that if it breaks, it goes down with the momentum, because it is mostly practiced by momentum traders, as I explained earlier. So you can also use this type of orders in breakout strategies, where you are anticipating the market to break either a support level or a demand level, or whatever trend line you are using, or whatever strategy you are practicing, you are actually anticipating for it to break. We also have another one like the trend confirmation. For those who actually trade trend line trading, you can also use these orders, because when the market breaks your trend line, maybe you're anticipating that what is going to go down, or when it breaks your pattern, your chart pattern, your geometric shapes. I usually refer to them as geometric shapes, because they're actually geometric shapes indeed. You now plan to enter with an order. Instead of you sitting and waiting for that shapes to form before you enter, you can just give the command that since it has started to form, when it breaks above that level, it should now go in my direction. So practicing these orders on your MetaTrader or whatever trading platform you are using is very, very important, because you are actually trying to enter with momentum. We also have different orders like the buy limit. Buy limit order also can be practiced by those who actually institutional trading concept, mostly by retail traders. Even though I use stop orders, but I do smart money concept trading also, but I have my own way I enter with the momentum. That's why I also use them. And sometimes I cannot wait for the momentum to start coming in before I jump in. Sometimes I can enter at the worst price level or at the better price level. So for make it very unique, I use such orders so that I can be able to enter exactly at where I wanted to actually get into the position. So buy limit is another one. So the buy limit order is placed below the current market price. That is, when you have your buy limit, you are anticipating that what if this market is going to go down and reach at a specific level, you are anticipating it to turn. So you place a limit order there, saying that okay, if it goes and reach there, it should turn and go up in your favor. So buy limit order basically is being placed, let's say, for at a demand level, for those who trade institutional trading concept, or for those who trade dollar basic return at a support level, where you're anticipating that when the market goes there, you should hit it and reverse and start going back up. So you give a buy limit. You can go and test it on your MetaTrader application. You are anticipating a reversal. You're anticipating that what a reversal should come in. You are actually entering at a support level or at a demand level. You are actually entering at a favorable level in price, because you actually enter the level where you choose and not where the market wants you to enter. Because when the market is keep moving, you can either enter at any price it gives you. You might end up not entering at the price which you were anticipating to actually enter, and that is why this form of orders are very, very important. So we also have sell limit order. Sell limit order is placed above a current market level in anticipation that when price goes there, it should reverse and go down. You can either place a sell limit order in anticipation to target a price at a specific level. Let's say a price will drop and target a specific level, or at a premium of a level. Let's say price have gone to the premium of your supply range or your resistance level. Then you are trying to place now a limit order in anticipation that if it goes and reach at an extreme level, you should try as much as possible then to reverse and maybe go down to your initial direction. Then you can also be used by supply and demand entries, where you identify your supply level, then you plot your zone. When price goes to your zone, you now trigger the order and it delete. And if you plot the zone anyway and price refuses to go to that particular level, you can now cancel your order with no loss. Just like how if you send somebody that go to the store and buy me something, and when on the process of going there, you just call the person and say, no, don't buy it again, just bring back my money or change it to this. You see, it is an order, but with the market order, you get filled instantly. That is actually the difference. So now let's try to look at stop losses in the market. So what are actually stop loss orders in the market? Stop loss actually is a vital tool. I call it a tool because I know how important it is. It automatically closes a trade. This occurs when price reaches a specific level where you want to actually cut out your risk from the market. Assuming you place a trade and say my risk for this trade is $2, you don't have to necessarily sit and be monitoring that trade until it goes and hit that $2 for you to manually close it. You can actually shift your stop loss, especially with the advanced Meta 5 we have right now. You just shift it and put it at that exact $2. When it goes there and hit, it closes automatically, because that will be more better and protected. If you are trying to close it manually, when you reach there and quickly pass it, you'll be saying, okay, let this thing pull back a little to $2, for me to close it, and you found yourself that you seeing the market keep going against you, going against you until maybe your account is actually going to go. So stop loss is a shield. It is what is protecting your account, and it's what is going to keep you into the game. It permits you to control your risks, stick to the risks which you have actually determined by yourself that you are going to risk per trade. It actually helps you to preserve your capital, and it helps you manage your emotions and discipline more better. Because once you have placed them, you don't have any control over that trade. It is either hit any of them or it actually goes in your favor. But if you place a trade without any of them, you are going to be trading with high emotions, as you are actually now trying to force the market maybe to move to your direction, and if it's going there and even past the level where you were planning to take the initial risk, you keep holding the trade, and it's actually going to cause you a lot of problem and you lose a lot of money. We also have another one which is called take profit. Take profit also is very, very important. So take profit order is for you to secure your profit when you actually ride in the market. When the market reaches a predetermined level, you are trying to actually close your position and secure the profit which you have been made. So it helps you to maximize gain instead of holding trade, and when you reach at a certain level with more profit, when you start reversing before you close it. So take profit is very, very important, and we're going to look at some key important components here. It actually helps you to target a specific level. You can take a trade and say, okay, my take profit is $100. You just place it directly to $100. When you reach there, it's going to close with a full $100. Unlike when you are just monitoring it for it to reach that amount for it to close. Maybe when you are trying to close, you can close with slightly lesser amount or more higher amount, or you can go and surpass that one and maybe drop back to $50. You might end up not even rewarding yourself more better as how you were supposed to have reward yourself. So it helps for profit target. It also helps you to automate your exit. When you mean by automating your exit, it simply means coming out automatically from the market when the price reaches a predetermined level where you wanted price to actually go. It also helps you to actually gain security, because it increases your capital. It is actually going to make you to earn more profit from the market, and sometimes it might actually hit you, and maybe the market continues in your favor and you regret. But it is what it is. You just need to be very, very consistent with what you are doing and the profit you're actually generating from the market. So what are the benefits of stop loss and take profit in the market? So using stop loss and take profit orders actually have significant advantage. It actually enhances risk management and actually automate your trading decisions and improve your consistency. This aspect of it, improving your consistency, is very, very important, because if you cannot be able to do consistent action in the market, you will never have consistent result. So consistent result can only come from you performing consistent actions in the market. Without consistent action, you cannot have consistent results in the market. It helps you to reduce your risks. It also helps you to automate your trading, and it also helps you improve consistency. That is what I was actually saying. So if you want consistent result with your trading, you actually need to have consistent action. And if you cannot automate your trading with this stop loss and take profit, it is more likely that you are not going to have consistent results. Your results are always going to be different. You need to have a fixed profit target. You need to have a fixed stop loss target. You don't be afraid of loss. If you have a good profitable strategy, obviously you are still going to make money no matter what. So here are some key takeaways you have to know. Mastering Forex order types is actually very, very crucial to your success. For instance, a market order actually offers you the instant execution into the trade, while pending order allows you to actually make strategic entries into the market. So stop loss and take profit orders actually helps you to manage your risks and also maximize your profit in the market. So using these tools actually is actually going to help you to optimize your trading strategy and make better informed decisions about the market. So this is basically what I have for you guys when it comes to trading orders, stop loss and take profit. And if you found value on this, consider hitting the like button and the subscribe button, and you should also turn on the notification bell so that I can be able to see my future videos. And we are going to actually move directly to the next topic, which is actually going to be lot size and leverage. I'm also going to be throwing more futures there. So if you have actually come through this one, then consider searching for that other videos so that you can actually look at it and also learn more in-depth information when it comes to basics of Forex. So I'll see you guys on the next video. Continue to trust the process.